going to be talking about is taxation in the UAE. So this is a paradigm shift in the way of accounting. It's a question that CA Joseph Philip, managing partner, Stewart and Hamlin, chartered accountants, is here to answer. Welcome to the show.
Oh, good morning. Good morning, Vivek, and good morning, Muriel. And thank you very much for the great introduction. And Monday morning, I'm sure it is a difficult time to
True.
hear on compliance part, but corporate tax is a reality, so we have to talk on it because it is which was not used to this place. That's the
Absolutely.
main thing actually, because UAE is a place where there was no tax for all this period, and we are coming into a tax regime. So, and it is a reality, and we have to get along with that. We have to accept the fact, and so we have to keep on talking. And I really appreciate Tally in that aspect, because Tally is it is basically this awareness, creating awareness among the
Correct.
people. That is a
Right.
great thing, and it is commendable that Tally is doing this every Monday, and 1 hour people are getting used to here on this, and really commendable effort from Tally. And thank you very much for Tally for inviting me for the talk.
Now, Philip, sir, also, since whatever we discuss this hour, we will also repeat that on Friday as well. So, twice a week, so knowledge will not, be missed out. They can catch it on Friday as well.
Exactly. That is what, because when we teach kids, it says that revision makes things bring back to, because what we are hearing it, you are repeating on Friday, right?
Right, 9 to 10 the same time. So
Okay.
today we're going to talk about a paradigm shift in the way of accounting. इसके बारे में. But if you have any questions about accounting, CA Philip sir with us right now on Talk 100.3. This is the best time if you have any questions because he's live in the studio और सारे सवाल के जवाब आपको दे देंगे. The number to reach us is 0586861003. ये WhatsApp या phone भी 808 1003.
Absolutely. CA Philip, if you could please talk to us about what are the basics preparations required by entities who do not have a structured accounting system yet. What is the importance of preparation of proper books, where proper books are concerned, proper books of accounts rather, with the introduction of corporate tax?
See, Muriel, if you look into the total number of companies here in UAE, as per NER means the National Economic Register, which is data source collection under Ministry of Economy. There are around 675,000 companies in UAE, all over UAE. But the thing is actually 675,000, if we categorize all the 675,000, I would like to categorize into three. One is a very organized entities, big entities, we call it. They may have a proper accounting department, maybe a CFO, finance manager, and all those things will be there. They have a proper account system, and they may even have a tax department under them, so they are not much they have to
Affected.
worry
Yeah.
on that actually.
Right.
They are already prepared for, they may be prepared for that. But around 80% of the entities actually are SMEs or MSMEs, we call it,
Small
and
and medium. Small.
medium and micro small and all
Okay.
those things,
Okay.
around 80%. And the great thing is actually, if you look at it, out of 675,000, only 352,000 companies are registered for VAT. Means around 48% of the companies are still outside the purview of VAT even.
Nice.
So, but when it comes to corporate tax, all these 675,000 has to maintain books of accounts, submit a register for corporate tax, and submit tax return. So, how they are going to do that? That is a challenge which the companies has to face. So, how they are going to face it? So, the importance of accounting software, like whether it is the Tally Prime and all those things, comes in there, because a proper accounting system, a proper accounting software helps them a lot to prepare these books of accounts.
Right.
So, how to prepare books of accounts? Basically, the small entities, if you look at it, what is the basic challenge? They consider the company and the owner same, right?
Correct.
because they will not feel a separation between the entity and the company.
Right.
Suppose there is a small grocery, and because if you look at the apartment we live, down ground floor there will be a grocery, there will
Correct.
be a beauty parlor, there will
Correct.
be a saloon. All what we need will be done.
Right.
So all these are small micro MSMEs and all. So for him, he brings in, he do business. He keeps the cash in the drawer, and his kid may come asking for school fee.
Right.
He pulls the drawer and gives the money actually. So for him, the entity and himself is same.
Ah.
So, but when corporate tax comes, that is the great challenge. Entity is separate, the person, the owner is totally separate. So that challenge, how he is going to, because he is used to this way of functioning for all this period, how he is going to, how to tackle that. So for that, there is the lot of compliance aspects comes in, because these type of drawings, it is called owner's drawings or director's drawings, we call it. There will be a limitation. Now there is a limitation. We cannot take any money what we want. We cannot say that this is my company. I cannot withdraw anything what I need.
Because every profit that you are going to incur, it is subject to tax as well. So that bifurcation needs to be done. Your expenses, which can be included, not all those will come under the system.
Exactly. So till now, even if VAT is there, what is there actually? We are it is a transaction tax, basically, as far as VAT is concerned. So sales is there, purchase is there, and that is where it's majorly looked into. But when corporate tax comes, all the below the line expenses and coming to the net profit part. So arranging to the net profit part and properly accounting in the respective chart of accounts, creating the proper chart of accounts. There are expenses which are allowed, there are expenses which are not allowed. And there are a lot of scope for tax planning in these areas as well, because there are expenses which are disallowed.
Right.
So if you properly look into that, there may be items which are putting in that can be considered as expenses which are allowed also. The way they are doing the accounting also need to be looked into. So these are the areas which small entities has to consider for that. And so there comes the challenge.
Right. We will continue this conversation. अगर आपके पास भी कोई भी सवाल है, you can always send us a WhatsApp 0586861003, या आप हमें फ़ोन भी कर सकते हैं 800-81003. CA Philip sir हमारे साथ on Talk 100.3, brought to you by Tally Solutions.
Talk 100.3.
Welcome to Daybreak with Vivek, Sanal and myself, Muralisa, in conversation with CA Joseph Philip, Managing Partner, Stewart and Hamlin, Chartered Accountants. He's here to talk to us about taxation in the UAE, a paradigm shift in the way of accounting. Now, before we could go on a break, we were having a conversation with CA Philip, sir, and we were talking to him at length about the accounting industry and about the guidelines and the rules. I mean, is there any guidelines that the accounting industry in the UAE follows?
See, as far as UAE is concerned, there is no any adopted accounting standard, but here the default means the normally adopted accounting standard is International Financial Reporting Standard, IFRS. But as UAE do not have an accounting body, we do not have a local accounting standard, but here all the financial statements accepting by the bank or any other places, it is considered International Financial Reporting Standard as the accepted standard. And if you look at Article 20 of Corporate Tax Law, it clearly says that you need to prepare books of accounts under an accepted standard.
And we will discuss about that. We've got Zubair with us on the line. Hi Zubair, good morning.
Good morning.
Good morning, Mr. Mayor. How are you?
I'm good. Good morning, Mr. Philip. Thank you for accepting my call. I have a small question. But my wife, she has a small boutique kind of shop, which is she's selling goods and she's doing in the same time tailoring kind of work. So monthly, approximately average income is you can say gross income 20,000 to 25,000. In fact, I have not even registered because it's under the
UAE
minimum requirement of the VAT.
Correct.
So
Yeah.
just want to know whether I'm eligible to pay the corporate tax or no. Because the thing is she has got two employees and the salary is approximately 3-4 thousand. So net income is, I should say, is on BEP, or maybe I'm losing. So I'm not
Very
sure whether I'm.
I understood, Vivek. Very good question, actually. This is the concern of all the people because that is what I said. Around 48% of the total companies registered in UAE are outside the ambit of VAT. Means they may be having income less than 375, or maybe out of scope business they are doing and which do not fall under VAT or anything like that. But as far as corporate tax is concerned, as you know, corporate tax, you may not be having a profit, you may not be need to pay a corporate tax, but the compliance requirement is that you need to prepare books of accounts, you need to have a proper books of accounts, and you need to file, register for UAE tax, corporate tax, and you need to submit tax return. So submission of tax return is mandatory. Registration for corporate tax is mandatory. And if you are not making profit, because you know that 375,000 is the basic slab, and if your profit is below 375,000, you don't have to pay any tax on that. But only thing
It's
is you need.
profit or the gross income.
No. Profit.
Profit.
It is not gross income. So you don't. So profit means all your revenue minus all your expenses and your staff salary, your rent, and all the expenses, netting it off, and then you arrive at the net profit. And basically the concept called taxable income, so taxable profit. So we have to look into any expenses which you are incurring, like entertainment expenses, and all some disallowances are there, which we'll talk later. But accordingly, if the net profit is below 375,000, you don't have to pay tax on it. But
I
again,
have
I'm
one
telling.
more question.
Yeah.
Yeah. One more question. When I'm going to pay the returns and all these things, so is there any charges for that, for paying the returns, or there's any fees, minimum required, the government fees, or are they applicable for this? Or?
Nothing. Because there is a portal called MRA Tax Portal for Federal Tax Authority. If you log into FTA's portal, you can see. Because you have not filing VAT return, you are not used to this MRA tax portal. Federal Tax Authority has a portal called MRA Tax Portal. You can log in, and everything is free. You don't have to pay anything on that. You file the return, and just file the return to show that what is your revenue, what are your expenses, what is the profit or loss. If it is a loss, it is a loss. The advantage of loss is that you can carry forward the loss, and when at a future date, if you start getting or making profit, you can adjust the loss against that. So that is a necessity of filing the return as well, but it is a mandatory. But when you properly file the return, these losses can be carried forward and adjusted against the future profit. Because of course, I wish your wife's firm start making profit. And
Already making profits. We're
Inshallah.
sure about that. Yeah.
Inshallah.
Nice, Umair. Lovely
Thank you
talking
so
to
much,
you.
Mr. Philip.
Thank you.
You too.
Thank you,
Bye-bye.
man.
थैंक यू या सी ए फिलिप हमारे साथ। अगर आपके पास भी कोई सवाल है तो आप हमें ज़रूर व्हाट्सएप कर सकते हैं 0586861003 और गिव अस अ कॉल 800-81003. So talking about this shift, let's talk about this basic idea of people thinking कि 375 तो मैं बना ही नहीं रहा हूँ. Why do I even need to register? So registration is utmost important, as you mentioned. Imara Tax is the platform where people can go ahead and do that.
all right. So that is what the law says, that registration is very important. And it is mandatory. All the entities, all the entities need to register. All the entities need to file the tax return.
Right.
So as we discussed, he may not be making profit, or he may be making a profit lower than 375,000.
Correct. That doesn't matter.
That doesn't matter. So as far that is the difference between VAT and corporate tax. So VAT you need to register only if your turnover is 375,000. Then you don't have to register. Or they will not even register if your turnover is less than 187,500.
Right.
You are not allowed to register even as far as VAT is concerned. But in this corporate tax, you have to register and you have to file the return.
And this is where I think Tally Solutions play a very important role, where people have questions like these, which is very basic. Tally Solutions can make your life super easy by giving you a seamless platform for you to be compliant with the tax authorities.
Exactly. There, that is a place where actually this software, including Tally, the great advantage of Tally Prime, because because I am here for almost 27 years now. Yeah,
Wow.
and I am in our office also. I'm using Tally for quite a long time.
Okay.
And in all other offices, I have other offices in other Emirates as well.
Okay.
So Tally Prime is a software which we are using across, and the advantage is it is very user friendly. That is the one thing. Second thing is actually it is unlike many other softwares, which is we may have to subscribe monthly or annual subscription or anything like that. But Tally, it's a one-time payment. So when it is a small entities like this, who is struggling even to make a profit, it is not worth to spend much money on an expensive software, paying monthly or annual subscriptions and all those things. It cannot be affordable for them. So as far as Tally is concerned, it is cost effective. Then another advantage what I have seen is actually many of the accountants who are coming from India, they are already used to work with Tally, because Tally is a software which is very much in
used
India,
in
back
India.
in India,
Right.
used in India.
But you can also
So-
get a free demo as well अगर आप एक business हो और आपको और जानना है accounting के बारे में और कैसे comply करे with the tax compliance as well, तो free demo भी होता है tallysolutions.com, that's the website. You have questions, phone कीजिए 808-1003.
Absolutely, and when we get back, we will be talking to CA Philip about owners and the companies. Can they be considered as one entity?
Talk 100.3.
Welcome to Daybreak with Vivek Sanal and myself, Murul Disa, still in conversation with CA Joseph Philip, Managing Partner, Stewart and Hamlin Chartered Accountants, and we're talking about the paradigm shift in the way of accounting. Right now, we have Umaira on hold with us. Good morning, Umaira.
Hi Umaira, good morning. Hello, mobile के last three digits 973. Hello.
Hi, this is Sanjay.
Sanjay, okay, I think Umaira दूसरे line पे. Okay, Sanjay, hi, good morning.
Good morning, Sanjay Babel from Best Insurance.
Oh,
आप?
क्या बात है. We are all good. CA Philip हमारे साथ है line पे.
I had a very simple
Hello,
question.
good morning. Good morning, Sanjay.
Good morning, CA Philip. I want to just quickly ask you, what are the deductions that will be allowed? What are taxable deductions and what are non-taxable deductions?
See, as far as the deductions are concerned, because it is mentioned that expenses which are incurred really for the expenses are deductible. And out of that, there are expenses which are deductible, and we talk about expenses which are not deductible. So when it comes to expenses which are not deductible, there is restriction. You might have read on entertainment expenses. So entertainment expenses means any expenses which are incurred for the entertainment within the organization, maybe for your shareholders, maybe for your customers, maybe for your suppliers, and anything you are incurring as entertaining expenses. It is deductible, but only 50% of the total entertainment expenses you are incurring can be deducted. Means if suppose in the year you are spending a total of 100,000 dirhams on entertainment, but you will be arriving at your book profit by considering 100,000 dirhams. And then there's a process called computation of taxable profit. So when you are computing the taxable profit, this 50,000 you need to add back your book profit, and then you need to pay on that. So as far as entertainment expenses are concerned, then another restriction is, as you know, maybe is on the interest expenses. You are paying interest on bank loans. You are paying interest on vehicle loans, and all those interests what you are paying. So they will not. The corporate tax law will not allow all the entire expenses as interest. So they will allow only 30% of EBITDA. EBITDA, you know that, okay? Earning before interest, tax, and depreciation allowance. So only 30%. But the thing is, after 30%, 70% is not altogether disallowed. You can carry forward the balance of the interest expense which is not claimed this year, and you can carry forward for the next 10 years. So basically, other than that, all other expenses which are incurred specifically for the purpose of the business can be claimed as expense. Uh,
So, I'm an owner of a business, and I also work in my business.
Okay.
So I draw a small salary compared to everybody else. But yeah, I draw a small salary. So for that salary, is that tax deductible
Exactly.
as
Very
an
great.
owner?
Very good question. Very good question. So that is a challenge because that is one point which I mentioned in the beginning that, okay, we need to consider business and the owner separate. So as far as the owner's salary is concerned or director's salary is concerned, that's a hot question and a hot topic for discussion. Because here there is no personal income tax. So if you are not keeping a bracket or there is a limitation for director's remuneration or owner's remuneration, what will be the fate of net profit? Nobody will have a net profit because everybody will keep the director's remuneration 100,000 or 200,000
Wow.
as you wish.
Right.
And
Correct.
you can easily reduce your net profit to that extent because the what you are drawing as owner's remuneration or director's remuneration is not taxed at a personal level, right?
Correct.
In other countries where personal income tax is there will not be a restriction on director's remuneration. Why? Because what you are drawing as your owner's remuneration will be taxed at your personal level. So here there will be restriction. So what will be the amount which can be allowed as a director's remuneration? We are waiting for a ministerial decision on that. But it says that there will be transfer pricing will be applicable. You know what is transfer pricing means? What will be the salary of a person of your education or your level in the market, what he draws? That may be there. Or it says for making it more easy, they may bring it as a particular percentage of your turnover or profit or anything like that. In Companies Act, it says that public listed companies can draw up to 10% of 10% of EBITDA. So that is so we do not know exactly what they are going to bring it. Either maybe a transfer pricing level means what is the normal salary payable in the market. Accordingly, we can fix it, or maybe a percentage of your turnover or profit or whatever it be. We need to wait for the ministerial decision on that. But of course, there will be a restriction on directors' remuneration.
So does that also apply to the benefits like rent, house rent, car, and so on and so forth for the owners?
That is a good question actually. Benefits, personal benefits again. What are the personal benefits can be allowed? There will be restrictions because your director's remuneration will be considered altogether because that perquisites also. Otherwise, you all these together. What are the perquisites you are drawing from the company? Whether it is a vehicle or whether your rental or whether your kids' education allowances, whatever it be, all considered together as director's remuneration. And when ministerial decision comes, these things will be explained properly. We all are waiting for that. What will be the decision on that, and that is what we.
ठीक है
Waiting.
संजय जी संजय जी अभी और we are running out of time but we would love to have more
Sorry.
questions. Thank you so much.
Sure.
Thank you,
Thank you.
Sanjay.
It's always
Thank
a
you.
pleasure to speak to you. वैसे Mr. Sanjay Babur जो है ना, he is the managing director of bestinsurance.ae.
All right.
Very valid questions. आपके पास भी सवाल 0586861003 या 8081003. This hour is brought to you by Tally Solutions.
And we'll continue after the news break.
Talk 100.3.
Never has this happened before कि 15-15 मिनट से लोग जो है CA Philip से बात करें. Sir, your popularity is super duper. We got to know today.
Oh, thank you very much. Thank you.
This is
Vivek,
all
for that.
thanks to Tally Solutions as well for giving this platform. We've got Omera with us on the line. Sorry to keep you on hold for so long. Good morning.
Hi, good morning. No worries. How are you?
Very good.
Fine, and good morning, Umera. How are you?
Good morning. Good, good. Alhamdulillah. So I had just one question. My father has a small shop. It's an electronics store, and we don't have an accounting system, and we mainly deal with cash. So do we also have to register?
Yeah, whether you deal in cash or whether you deal in credit or whether it is small or big, again, you have to register for corporate tax. You need to file the return. Only thing is, if your net profit, what you are earning, is less than 375,000, then you don't have to pay VAT. Corporate tax on that. But registration is mandatory. Preparation means maintenance of books of accounts is also mandatory, and submission of tax return is also mandatory. So, irrespective of the size of the organization, whether you may not have registered for VAT, but still you have to register for corporate tax and file the return.
Okay. And is there a registration fee as well?
No, there is no registration fee. Registration is free. You can log into if the Federal Tax Authority's portal. There is MRR tax portal is there. You can do your registration by submitting. It's a simple process of registration, and you can do the registration, and based on your financial year, submission of tax return is based on your financial year. Financial year you need to, because since you are not maintaining books of accounts, you have to start preparing the books of accounts. That is very important, and that is where all these softwares like Tally and all plays the role actually. So they will mean such maintenance of books of accounts is also very important.
ठीक है उमेरा?
All right. Thank you.
Thank you,
so
Mera.
much.
Thank you so
Thank
much.
you.
And
Thank you,
how
Mera.
to make books of accounts अगर है नहीं in a proper way जो compliant है with the tax authorities, tallysolutions.com पे जाइए और वहाँ पे ना free demo भी है, so you'll get more idea as well. We've also got Zishan with us on the line, but we'll speak to him after this.
Talk 100.3.
Every Mondays and Fridays, Tally Solutions bring to you Talk Compliance. We've got Zishan with us on the line. Sorry to keep you on hold, Zishan. Good morning.
No problems. Good morning. How are you doing all?
Very good, very good. CA Philip, आपकी आवाज सुन रहे?
Good morning, Sishan. How are you?
Good morning, Mr. Phillips. How are you doing? All good?
Going good, thank you.
Mr. Phillips, I actually have like a couple of questions regarding this what purposes.
Okay.
First of all, I have a free zone company, and I have made this company for the e-commerce businesses for Noon and Amazon,
Okay.
right? So the concern is that it's been like more than 1 year, and now the amount is approximately reaching like 300,000 dirhams, right? And I am buying most of like 95% of my items from China through Alibaba. And I pay all my the product charges through the debit card or the credit card which I have. So in that case, I don't know how to calculate the because there is no tax, right? I'm not buying from UAE, I'm buying from abroad. And I got the the invoices from Amazon after like every quarter that these units are being sold, and these are the tax invoices of those items that I have sold on Amazon. So at the moment, I am not sure what I have to do, as the corporate tax is coming up.
Okay.
And the second question is that as I have a free zone company, so do you have to follow all this process that the mainland used to do? Mainland companies?
Yeah, see, as far as free zones are concerned, there is some benefit given to free zone when you are forming a company. The free zone might have given a tax holiday or tax period. So corporate tax law also honors that the benefit what is given, but it's purely depend upon what is the source of your revenue, what is the source of your income. And your license is in free zone doesn't mean that you are eligible for the tax benefit. It purely depends upon what is the nature of your operation, from what is the source of your income. Suppose you are in a free zone company and you are selling all your goods outside, or your revenue source is, then in that case it's not UAE. Your entire operations you are carrying out outside. In that case, your revenue source is outside. So you fall under this benefit. You will be you can avail the benefit of 0% tax. But in this case, whether you are buying from abroad, but as far as this is an income tax, so income tax is based on the source of income, not from where you are buying, but from where you are selling and from where you are generating the revenue. So if we are selling to Amazon UAE, which is in the mainland, and your billing is to the mainland entities, means your source of revenue is mainland. Then how they are going means that the treatment of the mainland income and whether you have a free zone income, a mix up of this and all those things, you need to wait a little more. More clarity has to come how to bifurcate, or whether how to split the, because this is not based on the transaction, it is based on the net profit. So when it comes to net profit, how you will be able to split, or how to arrive at the net profit from mainland, because earlier the public consultation document which came earlier and the law which is came later has a slight difference in the definitions as far as that. So we need to wait a little more, but if you have a source of income from mainland, of course, even if you are a free zone entity, you are under the bracket of corporate tax, and you need to file and submit the return.
ठीक है Zishan?
Okay, sure. Yeah, thank you.
Thank you.
Thank you so much. The questions are going to be never ending, as in, when we approach towards June 1st. So a lot of, do you see that, thoda sa unsettling hai for people, CA Philip?
Yeah, actually, see, from these questions, and as far and also from the people, because we are dealing with clients and customers, and still now, and also there is no clarity in many of the areas, and the clients are also not very sure about how to go ahead with that. Certain things which I want to mention is here that, okay, because we have some practices, as I mentioned in the beginning, that practices, because we do not have a tax system here. So the books of accounts, even those who are preparing books of accounts, it is basically a management information system for them. They are preparing the books of accounts purely for knowing what is the result of that. So because of that, what is the problem? See, suppose I am a maybe company. I started the company, and I have 10 employees. Then my company, means that my business has grown, and so my visa quota has finished.
Okay.
So immediately what they will do, they just start another license. They will take another license.
So that you get 10 more.
More visa. But that is only for this visa and employees, but the operation will be in the other company, right? So the business will be, and they consider both these licenses together, because that has a trade license fee, employee salary, and all those things, but they will not be having a separation between that entity and this entity. But when corporate tax comes, it very clearly says that each license need to have separate books of accounts, need to file returns separately. So all these things, we need to separate it, plan it separately, and all those things. Now we are considering everything together, because at the end of the day, I want to know what is the net profit I am making. But,
exactly.
So this is something. These are the challenges which
this is the compliance
challenges actually. The compliance is, and I always tell my clients actually, because the price of non-compliance is much more than the cost of compliance.
Very important, yeah. And Tally Solutions makes our life easy as well. We got a question. We will take that question after this.
Absolutely. We will take a question after this. Stick around to Talk 100.3. This is the last segment of, Tally Compliance. We are...
Talk Compliance.
Talk Compliance. I
But yeah.
think I keep saying this time and ever again. I've
No
always
problem.
made my own merger out
1st
here.
जून के बाद मत बोलना.
बिल्कुल भी नहीं.
Corporate tax लग जाएगा तब.
110.
सुनते रहिए.
Talk 100.3.
9:50 on the clock. Welcome to Daybreak with Vivek Sanal and myself, Mira Lisa. Still in conversation with CA Joseph Philip, Managing Partner, Stewart and Hamlin Chartered Accountants. We are talking about the paradigm shift where accounting is concerned, and we have a question that's coming from a listener, right?
Right. So we got a question. Can an owner draw salaries from multiple companies? To give an example, I have my own company. I'm also working here. I'm getting salaries at both the places. Is it allowed?
See, if you are working and you are getting a salary, means it is not coming under the ambit of tax, because it is your personal income. So personal income is not taxed.
Okay.
And when you are working in a company, along with that, whether the remuneration what you are getting from the company, where it is your own company, and it falls under the owner's remuneration or director's remuneration, as we discussed earlier. Of course, there will be restrictions on that, because you will not be allowed to draw whatever salary you want. And if you are working somewhere, and also you are and you are an owner in another company, then we need to look into what is the effort, or what is the time what you are spending on your own company, and on what basis you are drawing a salary. And also we need to see whether it falls under the restrictions as far as we discussed earlier, that transfer pricing restrictions or a percentage of the revenue, which we are still waiting for. That we do not know exactly how the director's remuneration. That is a great topic, which is a great hot topic, which is in discussion in the industry, because that is for tax planning and tax structuring. All are waiting for that, actually, the director's remuneration part. And how we are going to, that is going to be treated. We need to wait and see what is the ministerial decision which is going to come. But it can be depending on the effort what he is putting in his own company. We need to
Very
wait.
interesting. But then, this happens, as a consultant, you work for a lot of companies and, you
Right.
happen to get income from there also. But it's allowed to do that, right? Being a consultant and having your own company, but, you're also a consultant. It's allowed, right?
I didn't get your
No,
question.
so I work for one company, right? Or rather, I have one company, but I'm also a consultant, say, in Vivek's firm. I'm a consultant in your firm. I'm a consultant
Where
in
you're getting
his firm.
salaries.
Yeah.
See, that way, earlier it was not allowed. When you are in a visa of a particular company,
correct.
two things are necessary. That employer or under whose sponsorship you are need to give an NOC for that, actually, to have your own thing. And if you want to register your own company, you need an NOC from your employer. Then only economic department will give you a registration, a trade license. But certain free zones, actually, even without an NOC may give, but that depends. But normally, no objection letter is required from the employer for you to have another license legally. So there is
Right.
a restrictions on that.
Okay.
We're out of time completely. We really thank you, CA Phillips, that, so many basic questions, so many revelations you made, so much of clarity you brought in. So, really big thank you. Sorry, we couldn't cover all the questions that you sent.
Exactly, and even the things what I wanted to discuss and brought it.
But in a nutshell, or just summarizing it quickly, if you can just talk to us about things that we need to bear in mind.
See, one thing is actually what we have to bear in mind is that taxation is a reality, it is going to happen. So, one thing is stay informed. So, whether you may not be able to go in detail of the regulations, tax, all the articles and all, but when you are running a company, you have to be stay informed. So you need to go through what is the tax regulations, how it is going to have effect on you or impact on you. That is very necessary, because that is how you have to when you are doing your operation, how the impact of the tax which is going to happen, you need to be informed on that. And then maintenance of books of accounts, because that is whether you have your own books of accounts, or means accounts department or accounting people under your office, you may not be able to cope up with that because of your low revenue nature. But in that case, actually, you need to seek the
Help of a
professional
professional.
services. Seek professional services, and in that sense, you need to. But the maintenance of books of accounts is mandatory. And the third thing is actually planning ahead. That is very important. Certain people are saying that okay, tax is coming in 2024. We have 9 months more. But see, if you fail to plan ahead, then you are planning to fail. In business.
kya baat hai.
Very nice line.
Yeah, so that is very important as far as the plan. We need to plan, because 2023 is a period where we have to consider what are the aspects we need to take care as far as the business is concerned, on how we have to welcome the tax. Based on that, we need to do all the preparations as far as. So 2023 is a period where you need to plan for the corporate tax. So that is why I said awareness, that is very important. Maintenance of books of accounts. In that case, in that scenario, the importance of Tally Prime and all the softwares and all, very important. And if you are not in a position to maintain, to have your own accounts department under you, you can outsource the accounting function to professionals or consultants and all those things. But books of accounts is mandatory. Maintenance of books of accounts is mandatory. And then as far as planning, we need to do the planning in ahead. And then compliance is very important. As I said, the cost of non-compliance will be much higher than the cost of compliance. So the price may be the price of a software. But the cost of compliance, because when suppose there is a tax audit happens, or there is an inspection from the tax department happens, and if you do not have proper books of accounts, or the profit what you are reporting is not what is your actual profit, that time the penalties and all those will be much higher.
2024.
2025.
2025.
Or it
Get
can be
ready.
later also, because the books of accounts we need to maintain for 5 years actually.
Yeah.
So it can be 2020, even 2030, even 26, even we do not know when it is going to happen.
We can go on with this conversation, but we will have you again in our studios to talk more about this. Currently, we'll have to take your leave.
Thank you.
And
Thank you so
so
much.
very
Thanks
much.
a lot. Thank you,
Thank you.
Vivek, and thank you, Marilla, and thank you, Tally, for giving me the opportunity, and thank you very much.
But yes, log on to tallysolutions.com and वहाँ पे आपको सारी information demo भी मिल जाएगा. Every Mondays and Fridays this happens.